Hi, this is Professor Davenport, and I'm here with Joshua Jenson, a certified public accountant here in Edmond, Oklahoma. And we're going to be discussing the tax code, some of the complications of it, as well as some suggestions for reform. And Joshua may even give us a few tips on how to do our best to manage our taxes before it's all over. Joshua, thanks for joining us.
Hey, appreciate you having me.
All right. I want to ask you, one of the things that everybody talks about in relation to the tax code is how much it has grown.
Yeah.
And as it has grown, obviously the need for certified public accountants has grown as well. Could you just give our students a little bit of an explanation of what exactly it is that a CPA does for their clients and how you help with tax preparation and planning and such?
Right. Well, as CPAs, of course, we're involved with a lot of different aspects of any business. And so what I'm an expert on is dealing with the taxes, not only for the business, but for the individuals and the individuals that own those businesses. Of course, CPAs may just work for a bank. They may just work for a business. They may do audits that don't have much to do with tax. And so really the tax aspect is maybe 25% of what all CPAs do. But when you are approaching taxes, because that's what we're addressing today, what a CPA brings to the table different than, let's say, somebody that is an enrolled agent with the IRS, which just means they've passed an exam so they can prepare taxes, or just your neighbor who has registered online to then do your taxes, is that we have to have 40 hours of continuing education every year. So we've got to go to 40 hours of classes. We have to have ethics courses each year. And then we typically have to have education related to what we're doing, and that's just into what you're talking about, is that the tax code, in it being complex and it's growing, and what's the need for having a CPA is that because of Congress wanting to maybe help the economy and help Americans and help business, small, large, they use tax incentives to do that. And so the tax law could be fairly simple, as some of our politicians have suggested, having like a flat tax.
Sure.
But the tax code gets complicated even if we have a flat tax, because that would just be one page of the tax code in the sense of what is the rate. Right now the rate is 0, 10, 15, all the way up to 39.6% now. So where the tax code comes into play is, well, what's income? And you think, well, that's simple. It's when I go to work for somebody. Well, what if you don't work for somebody? What if you clean 10 houses? Is that income? What if you get reimbursed mileage? Is that income? Now all of a sudden you have a tax code. So what you're looking at is a definition of income, a definition of expenses, a definition of credits, and then examples through all of that. And so the need for a CPA is just similar to if you have a heart issue, or if you have issues with your teeth or with your eyes, you're not going to probably at home ask your wife or your brother-in-law or your neighbor to step in and check out your heart, or put a filling in or check your eyes. Even if there was some kind of kit you could buy, you would want to go to an expert that's dealing with that. So even if you're hiring a CPA, you want to hire a CPA that's dealing with taxes. And us CPAs, we're going to make that known what our expertise is. So getting somebody involved that's going to keep up with those laws is what's going to benefit anybody really that's paying taxes. And basically, once you graduate from high school,
you're paying taxes.
You're in.
Exactly.
You're part of the club. Yeah.
Well, it used to be, and I'll mention it, we'll talk about this a little bit further here in a minute. It used to be, they sold the income taxes, only the rich would be paying it. And so now, if you're paying taxes, congratulations, you're rich.
That's right. Exactly.
You've met the qualification.
Yeah, exactly.
There used to be, I can't remember if it was USA Today or US News and World Report, but would send out a generic tax kind of return information to 100 or so CPAs.
Right.
They would collect those and come back, and invariably they'd get almost 100 different returns.
Yeah,
and
exactly.
how is that possible? How does the IRS code allow for the same information be interpreted so differently?
Yeah. Well, and the first thing I'll tell you is, if I ever got asked to do that, I would not do it. Because one little fact can change everything. And so, and I've read that, like Money Magazine did one recently. And so they'll send you a set of facts, but believe it or not, if a married couple's involved with it, it can be completely different than if you're head of household, which means that you have a minor living with you, versus if you're single, versus if you're married filing jointly. So my point is that when you're going through and you're doing the return, if you fail to pick up on what the status is, now that could lead to four different results.
Exactly.
Things in regard to the income limitations and with exemptions and tax credits. Well, if you forget to remember, there's a phase out when you make so much income. Now this gets phased out. So there could be one CPA that doesn't pay attention to that phase out, and the next one does. So the good thing is we have really good tax software, that tracks any and all of that. Of course, we're following up on that. So you probably would find if you rolled back into 20 years ago, it would probably be 100 different results. Now it'd probably be like 80 different results. Still quite a few different results. But like I know with our firm, we're selective on who we want to work with, and really the main thing is because of, just to your question, we want to make sure we know that client so that we can get the best answer possible. Because the more we can know about you and your family and your business, and then the other things that you're involved with. So if you're doing what you're doing, plus you have a side business and another side business, and your wife has a business, well, that collectively could lead to a different result. Now, if your child, one of them's over 18, you got several kids that are under 18, all that can change. So the more you know about the client, the more you're going to be able to get a better result. And then, of course, you just have different degrees of interpretation of the law. So it's just like with lawyers, one lawyer versus another can come to different and opposing opinions. So we have that. But here's really the good news, is that because of the internet, irs.gov, you really can find all the answers. Now, it may literally take you 50 hours, to find the answers on your own. But the IRS has done, as well as the Oklahoma Tax Commission, a phenomenal job of putting out everything there for free. Not only the code, but the rules, the regulations, and there's revenue rulings. And then they have links to other things where it leads to court cases and U.S. cases of law related to the taxes. Even now with audits, if the IRS comes to audit you, you can go and see what the audit guide is that they're having to follow. Now, I don't recommend that you do it at home, so to speak. When the stunt man says, "Don't try this at home." But at the same time, the reason I'm telling you that is that even for CPAs, everyone should have an equal amount of information at their fingertips now, which also shows just how complex it is that there's so many different avenues of getting to the answer.
Well, a lot of the complaints, in addition to the complexity, is simply the largeness of the tax code. And I know there used to be, they'd measure it in page size, like 70,000 pages or whatnot. And how large is the current tax code, and how does that sheer size make it difficult for the average citizen, the average business owner, to keep up with all these changes?
I don't have an exact number for you. I should have looked into that. And the only reason I say that is that, when I first started practicing, you literally would walk into the law library, at your firm, and you would see all of the tax law, and so you could kind of gauge. Now, with there being the internet and everything's PDF and things to that effect,
we don't count pages. The internet has saved us.
But here's the thing to know, is that if you just took the code, that's just the law, and you then added all of the forms, and then you added the instructions to the forms, and then you added the revenue rulings, and then you added the revenue procedures, and then you added the court cases. I literally think if you then converted that to paper, now you may find a more actual result, but the last I knew, now this might have been a couple of years ago, you could literally paper a football field and then 100 feet high.
Oh, wow.
So 100 yards by however wide a football field is, 100 feet high would basically fill that up. So the good news with the internet is you can do keyword searches, and like we have a tax software that we use, but then we also have a tax research software that we use. So we can go in and put in a couple of keywords, and then it's going to pull everything relevant. But it is massive. It is massive.
Well, and it changes every year, correct? I mean, they literally make changes all the time.
Yeah, daily at times.
Which, again, for the average person, I'm not keeping up with that. Or even the business owner is probably, they're focusing on doing their business and not what little change in the tax
Right.
code that may affect me.
Right. Well, and that's why I think you want to get a CPA on board, but even within the CPA industry, we're careful in our firm to make sure that we're still focused in on a type of client in the sense that there's so many law changes. So we don't really deal with retail, oil and gas, construction, those that are kind of doing manufacturing or buying and selling widgets, salons and things to that effect where there's product involved. We mostly deal with service industry, so doctors and lawyers and those that are more making money off the sweat of their brow is our type of client because there's very certain laws to them. So if there's a law change to the oil and gas industry, we're not going to pay attention to that. So that's why we don't work with that kind of client. So
it makes it more manageable for you.
It really does.
To keep on top of the issues your client are concerned about.
Well, and I tell people, think of CPAs as you would a doctor or a lawyer from the standpoint of you don't go to your dentist and go, well, hey, you're a doctor, can you also operate on my foot? You go to a foot doctor. You go to a pediatrician for your kiddos, and then once they're 20 years old, they need to go to a general practitioner. If you have a brain issue and a heart issue, you're going to very different experts. Same thing with law. Most, they're going to do personal injury or criminal or divorce, and there'll be different attorneys. And so even within the CPA field, I think you need to look at it. Now, there's firms that are large enough that they'll have the experts, that can cover all those. But you don't want to just assume that your CPA can do everything. And again, most CPAs are going to tell you pretty quick, hey, this is what we deal with, this is a match, or it's not. But that's because of how complex it is. Yeah. My grandfather was a CPA, practiced for over 55 years, started practicing when, the tax code was basically like a booklet, and, he would do simple tax returns that would take, 10 or 15 minutes, and that covered most of the clients that he's doing. But as it's progressed, you have to get more specialized in what you're paying attention to.
Well, we celebrated, if that's the correct term, the 100th anniversary of the income tax this year, right?
Yeah.
And there have been movements in the past to try to change the structure, as you alluded to, the flat tax, or people who wanted to have some sort of national sales tax or consumption tax. From your perspective, what are maybe a couple of advantages or disadvantages from any of these other proposals versus kind of what we have, which is the progressive income tax?
Right. I think the progressive income tax is probably the most fair of all that because every party has had some kind of say in kind of taking this lump of clay to kind of put it into the tax code that it is now. And believe it or not, 47% of Americans don't pay income taxes. So there's 53%
Now, there was a politician last year who got in trouble for saying something like that.
Well, this is true.
Pointing that out, right?
Yeah, this is true. Now, they may still pay sales tax. They may still pay business taxes. They may pay property taxes, real estate taxes. They're probably paying Social Security, Medicare taxes. It doesn't mean they're paying no taxes. We're talking specifically to your question on income taxes. Right. And so from that perspective, if you have a family of 4 kids and 2 working adults, there's going to be provided exemptions and allowances and itemized deductions that are going to help reduce down their income. And so I think that's a fair side. I think where maybe we've gotten out of whack is that because there's 47% of Americans not paying any income tax, there's 53% that are.
Right. There's
just been more of that burden shifted, and I think it was a fair deal for the last probably 12 years. But this year in 2013, our highest tax bracket is now 39.6.
Right.
It's for those making over $450,000, and in Oklahoma, that's a huge amount of income. But if you're in the West Coast or the East Coast and you have a 2-income household, don't get me wrong, that's still a heck of a lot of money.
Right.
But it's not as much money as it is that it would be here. And so when you take into account someone making over $450,000, and collectively in the family, and you're now paying 39.6%, and they've introduced a new 3.8% tax, and then if you've got some kind of state tax, which most of them do, nowadays, it's not quite 50%, but it's almost. In Oklahoma, if you're in that top 39.6 and you have 3.8 and you take into account our state income tax, it's 48.65% taxes.
Exactly. Yeah.
So I think the progressive is very fair to working Americans in the sense of, probably the households that are making $250,000 or less. It seems to be fairly fair. It doesn't seem that fair to single individuals because you kind of get into the rates a little quicker.
Sure.
And probably if you're single, you're still carrying a household. But I kind of feel like for small business owners, getting that up to the 39.6, that progressive aspect has grown a little less fair from that perspective. And then when you're just kind of looking at even the aspects of income taxes, and you got capital gains, and you have payroll taxes and things to that effect, you know, the capital gain is really fair, I think. I think it's great from the standpoint of that if you sell stock or if you sell your business or something to that effect, there's a capital gain rate of 0, 15, and 20%. Right. And the thing to know is just where is your income tax for regular purposes, and that just mirrors with that tax rate. So if you're in the 15% tax bracket, you have a 0 capital gain. If you're in 15 all the way up to 35, you're in the 15%. If your income's above 450, which means you're also in the 39.6, now you're at 20%. Right. But my point in saying that is that a 0 and a 15 and a 20%, I think is a very fair amount of capital gain. Probably to those that are having to pay a tremendous amount and it wouldn't see it as fair, but it's a lot more fair than 39.6. Right. And the point in even bringing that up is that, you know, even in our lifetime, there was not a capital gain rate in the sense of whatever your income tax rate was. Now, that's probably when we were kiddos, but that was just your tax, regardless if you sold a company or stock or anything to that effect. And again, that just what adds to the complexity. Well, what is a capital gain? What is a capital asset? What's a capital loss? And some limitations with that. So I think the progressive provides the most fair, but I just reiterate the same for those making $250 or less.
The difference between capital gains and income taxes. You mentioned how the rates are different. Yeah. What is the justification for that? What do you think why have they said, okay, we'll tax income, as in salary, wages, at generally a higher rate, and capital gains at a lower rate? Right.
I mean, it kind of comes down to two distinctions. If you've earned it, you know, that's going to be your regular income taxes, just like what you had said. So whether you own a small business or you work for a business, you've earned that income. Right. And kind of part of that, though, is interest income and dividend income. Those kind of fall into some of is there ordinary capital gain? Interest income is ordinary income tax rates. Dividends are capital gain rates, which is good. But more to your question, a capital gain is going to be, in essence, something that you bought, you invested in it, you held it, and now you've sold it. So you haven't earned it in the sense of the sweat of your brow, typically. You bought Walmart stock, you held it for 5 years, you sold it. Right. So that's going to be a capital asset. There's different capital gain rates if it's real estate, but it still can be a capital asset. It's a little bit different tax rates, believe it or not. Real estate has a little higher and a little different, but it's still capital gain. But it's the same concept, is that there's an asset working for you, and basically by just an appreciation in value. So that's what's going to be kind of your rule of thumb. It would be subject to capital gains.
And there is some risk associated with the capital gains income. The stock could go down. That's right. The home value could go down or whatnot.
Right. Well. Yeah, and there's two key things on that. When you sell your home, if it's a loss, it's never deductible. If you sell your home and you've lived in it for 2 years, the gain is not taxable as long as the gain is less than $500,000. The gain being compared to what you bought it for, not what you owe on it, and not your sales price. If you bought it for $100 and you sold it for $600, you have a $500,000 gain. Right. It's tax free. If your gain's more than $500, then you're going to pay some capital gain on it. So it's, for most Americans, that's pretty fair. You don't pay any tax. Sure. You know, when you sell your house, it used to not be that way in the 80s and early 90s. You could pay tax selling your house unless you reinvested it. When you talk about capital loss, so if you sold Walmart stock and you took a $5,000 loss compared to what you bought it and what you sold it for, you only get to deduct $3,000 of your accumulated net capital losses a year. So that part, I think, is really unfair, is maybe not the right word, but it's massively outdated. Gotcha. I think if they wanted to limit capital losses, they could limit it to, you know, $15,000 or $25,000. Right. So if you have a bunch of capital gains and you have a bunch of capital losses and you net it all together and your net capital loss is more than $3,000, you don't get to deduct it. It carries to the next year. So unfortunately, we have a few clients that have been in some circumstances where they might have a $200,000 capital loss, and they're only going to see $3,000 a year, unless they hire a good CPA and later they have a big capital gain. That capital gain can offset by the capital loss.
Okay.
Now you can see why we have a
This is so
tax
complicated.
code.
Yes,
Yeah, I mean, it's just all the different aspects that go into play.
What are some of the employment-related taxes that a business owner is required? I don't think a lot of times we don't think of, when I get hired, all of the taxes that now I have just obligated this employer to pay on my behalf.
Right. What we tell our clients is that it's, if you kind of round it, it's about 8%, and some of it gets phased out. But there's basically 3 key component things that you have to pay tax-wise, and that's you have to match Social Security and Medicare, so that's your payroll tax. The second is federal unemployment tax, and then state unemployment tax. And for the payroll taxes, you have to match 7.65%. So you have 6.2 that's Social Security, 1.45 that's Medicare. But Social Security gets phased out, and that changes every year, right around $125,000 this year. I believe it's somewhere around there. That Social Security phases out, so you don't have to match it anymore. But for most small businesses, they're not paying their employees $125,000.
Right.
Then for the first $7,000 of wages, you pay a 0.8% federal unemployment tax, which is about $56 an employee in a year. And then for Oklahoma, they've kind of changed that every year. It's a different threshold. So roughly around, and I want to say that this year it's around the first $20,000 of wages to an employee, you have to pay a percentage, and that percentage just depends on your business, depends on what kind of business, the experience rate, and people quit on you. So it's anywhere from a 0.1% to maybe a 5% rate. So that can be anywhere from $10 to $700 per employee. I can
imagine this would be very challenging to keep up with.
So and let me give you a little inside secret there is that our firm, we don't even do payroll tax. So when you ask me about those dollar thresholds, like for Social Security and Medicare and all, I'm not up on that now. I could look in about 3 seconds on my software to tell you the number.
Sure.
But even our firm, we decided 10 years ago, we don't want to be the expert even in payroll and employment tax law. So we hire companies like Paychex or Paycom or ADP or QuickBooks, has payroll, to where there is a service, an expert that is keeping up with any and all of those rules. But rule of thumb is it's about 8%. So if you're going to pay someone $10,000, and so I mean that's maybe someone part-time, year-round, $10,000, you're going to have a cost of 8% on top of that. So you're going to pay another $800 as an employer in those taxes. Then you got to have taxes that are withheld from the employee for federal and state income tax, Social Security and Medicare. And in some states, we want to get into that, they have unemployment that's actually withheld from the employee, not here in Oklahoma. So you've got to withhold, match, pay it in. Some you pay to the federal, some you pay to state, some you pay to Oklahoma Employment Security Commission. Some of it you do online, some of it you do in paper. Some's due within 3 days of payroll. Some's due on the 15th following the month that you had payroll. Some of it's due quarterly by the 30th day of the following quarter, and some of it's due annually. And that's why we don't necessarily keep up with payroll anymore, because my gosh, it's just it's a whole new industry now. And that's why companies that I had mentioned have become very successful, is that even CPAs are saying, gosh, go to the expert that will keep up with any and all of that.
And again, it seems like the complexity allows for this kind of niche development in different sectors to be able to truly be an expert in this portion of it. Over the last 15 years or so, there's been different periods of time where there's been a movement to try to impose some sort of sales tax on internet purchases. And again, we've seen in Congress this year another proposal to do this. From your perspective, working with the kind of clients that you work with, some I'm sure who do business across state lines and whatnot, what would the impact of this kind of change have on them?
Well, and this has been an evolving issue probably for 20 years, coincidentally about the time I started my career. And I was an expert at a firm for them in multi-state tax issues. And so I've been able to kind of keep tabs on all that. We do have a number of clients that do business all over the country. And so there's kind of a basic term to know about these issues, and it's called Nexus, N-E-X-U-S, Nexus. And If a business has nexus in another state, then they now are subject to the sales tax rules of that other state. So a simple example would be you have a business in Oklahoma and they've sold something to Kansas. So now you would look to Kansas law because every state will be slightly different.
Okay.
But there's kind of three main key components that each state looks at to determine if you have nexus. And nexus means, whoa, you're subject to Kansas law when it comes to sales tax. And that is, do you have a physical presence there? Meaning, do you own property there? Do you have a lease there? Do you have an office there? Do you have employees there? That's the second component. Do you have employees there? So do you employ a Kansas employee?
Gotcha.
Or do you send your employees up there quite often to either deliver or sell or have a presence there? And then are you keeping property in that state? So if you're doing all three, you definitely are doing business in Kansas for them to want to have you collect Kansas tax. If you're doing two of the three, sometimes it depends on how much. I mean, there's states that say, if you're not in our state more than 3 days a year, you're not subject to sales tax. If you're in our state more than. New York, if you contact your customers in New York while you're in New York by phone, internet, texting, tweeting, you now have nexus. So nexus would mean I'm an Oklahoma company and I've done enough business in New York or Kansas that now when I sell to Kansas customers, I've got to collect Kansas sales tax
and then remit it.
So Amazon has been kind of probably the most well-known opposer to this nexus.
I wonder why that would be. Yeah, right?
And actually, I just read in Fortune magazine, it was actually published a couple of months ago, but I read a very lengthy article actually this weekend, knowing we were going to touch upon this issue. But it was very interesting to see how each of the different states determined whether or not they had nexus. Again, nexus being you're subject to that. So here's the impact, positive and negative. I think the positive is to, let's say, Oklahoma businesses, if you were to go to downtown Edmond or Moore or downtown Oklahoma City, you've got the guy that is selling ties and clothing or luggage or, a cake, any of those kind of things. They have to collect sales tax, period. We don't really have a provision here where you can say, well, hey, I'm a Kansas citizen, and so even though I'm buying this luggage in Oklahoma, I don't have to pay Oklahoma tax. Now, if a Kansas person comes and says, hey, ship it to me in Kansas, there's some ways that potentially that Kansas resident doesn't have to pay Oklahoma tax. But here's my point. That's kind of unfair to the Oklahoma business or the businesses that are in every state, like let's say a Walmart. They have to collect sales tax. It's not unfair from the standpoint of the company because it doesn't cost them anything. Okay. But now, as the consumer, if I'm sitting there and go, well, I could buy this shirt from this company and pay $59 plus sales tax because they're in Edmond, or I could go online and find a company that's in Florida, buy that exact same shirt, I buy enough of it, there's no shipping, and because they don't have a presence in Oklahoma, I don't have to pay sales tax. So I just saved, let's say, 8.765%. Okay? So if I'm buying a lot of that, I go, well, I want to go ahead and buy from Florida. Now, Oklahoma just lost out. Our Oklahoma employers, which provide jobs and taxes here, just lost out. Taxes for sales tax typically go to schools and helping the local government. So if they kind of level the playing field in essence, then there's going to be less incentive for you and I to maybe consider buying something from Florida. We're just going to go ahead and buy it here. Because we're going to not really save that much. So I think there's a positive to kind of the local business, and I think it's a coalition like Main Street, businesses of Main Street or something to that effect, where they've really been pushing for there to be a level playing field. Where we're going to lose those, the consumers, is maybe we are a business that buys a lot of product from a Florida company, and we're buying it from Florida as a business, office supplies or whatever, because we're saving that 8%. So now we're going to have an 8% increase in some of our costs, let's say. Or you could say it's an average of 6% nationwide. So that'll be some of the impact, is that if a business has more costs, or if you have more costs personally, then that's just less you're going to spend on other things. What'll be really interesting, though, is what the states have done is built a coalition in essence where it's kind of voluntary. Like the states say, hey, I'll watch your back if you watch my back.
Okay.
So if you find people doing business in your state that are from my state, let me know. I'll let you know if I find people in our state from your state.
Kind of a state version of the neighborhood watch program.
Yeah,
right?
exactly. Or
we
the
see
mafia.
Yeah.
You know.
Well, I was thinking a little bit more positive.
Yeah, exactly. Yeah, but you know, with the different states looking out, and so what is being put into play, and there's businesses that can actually do it now, but it's costs the company to participate. But basically, if they do this, there will be a online way that you will collect all these different taxes. There'll be like a program that's associated, and then you kind of filter in, okay, I made this many sales to Rhode Island, this many sales to Kentucky, so on and so forth. You remit it to one agency, and then that agency will send it to the different states. Wow. But talk about, I mean, gosh, the complexity to put that in, and then how does a business, you know, we're a small business. Sure. We don't have product, but many small businesses, for them to buy that software, get it involved, or implement it, or how do you do that? Boy, it's going to be a lot of...
Very difficult.
Yeah, and now you have a whole new tax code.
There you go. Well, listen, as we wrap up, many of our students have not yet begun their careers, as you might imagine, or just coming out of high school, going into college. But we have some that are right in the middle, and they're working on a degree so they can advance in their current job, and we have some that are on their second career.
Yeah.
Is there any kind of piece of advice that might be common to all of them that, as they look at taxes and how they can, from a personal standpoint, ensure that they're minimizing their tax obligation and doing a good job of making sure the government only gets what it's supposed to get.
Right.
Is there any kind of advice that you could give them to say, here's something that you need to think about?
Yeah. Well, what I would keep in mind for any of those is that if you pay for expenses related to your job, if you're going to school and paying for it while you're working, if you have a child or a foster kid, or if you got married or now you're getting into... You need a CPA to help you, meaning those are some pretty basic things. But I think versus saying finding a CPA, meaning we're the only ones that are going to know anything about tax law, find somebody that deals with whatever it is that you're doing as part of their expertise.
Okay.
So when you get out and you get a job, and let's just say that you married, you have W-2, you're buying a house, you think, oh, I could just probably do it myself. Well, did you know you can deduct real estate taxes? There's certain mortgage insurance that you get to deduct. You may not know that. So now all of a sudden you lost out on $2,000, $3,000 worth of deduction. Could have saved you $500, $600 in taxes, and it might have only cost you $250 to hire somebody. So more what I'm drilling down to is, don't look at tax help as a cost. Look at it partly as an investment. Meaning you're going to spend something, but if you go to the right person, you should save more or have more peace of mind than what that cost you. So I know I've even got friends that, they may still want to spend their Saturday or a couple Saturdays doing their returns, and they may call me for a little bit of advice or whatever. But invariably, when I look over their return, I'll say, hey, I know I'm not doing your return, but you missed this, you missed this, you missed this. So even though that person may think, even though it's a buddy of mine, I can think of very specifically, he's like, well, but I'm saving the cost if I just do it, and I'd rather spend that $250 on something else. It's like, well, maybe you save $250 fee, but you just paid another $800 or $1,000 or $1,500. And so really, when you're trying to find the right one, you don't need to necessarily interview, let's say, and spend a tremendous amount of time. I just think when you go to hire a CPA or a tax advisor, say, I'm married, my wife have jobs, we own a house, give them some specific. Is this somebody you normally deal with? They're going to say yes or no.
Right.
If they say, oh, we can do that, sure, well, that doesn't give you enough confidence. If you're a business, to say, I'm a retail business, do you deal with retail? So usually just one or two questions you're going to know.
And finding that person, like you said at the beginning, finding the person that really specializes where that client is at is going to make all the difference. Yeah,
absolutely. Absolutely. And especially, like, I've got a few clients that before they even graduated, maybe they knew they were going to take over a certain business or go into a certain business, or maybe they're getting out of medical school or something. They came and talked to us before, and we were able to even kind of help them with some information to say, okay, as you get out, make sure you're doing this. So I would also probably throw out there the wrong time to probably find somebody is January through April 15th.
Right.
The right time to find somebody is if you're graduating in May, find somebody in the summer. If you're graduating in December, find somebody in November or December or January at the latest, because then you're going to know you're with somebody that if you have a quick question, they'll be able to help you with that, get you the right answers and save taxes. Because, you know, you want to pay the right amount of tax, no more, no less. So get with the right person to make sure that that's happening.
Well, Joshua, I sure appreciate your time.
Yeah.
I know our students are going to, and
I appreciate it.
Hope you have a great summer, what's left of it.
That's
and,
right.
I'm excited about letting our students hear from you.
Well, I appreciate that. If anybody has any questions, just let me know.
All right, thanks.
Thanks, sir.